Welcome back, friends, to another property update video. So we're going to kick it off with the cost of living. So the BBC has reported that rents and house prices continue to rise. And we will touch on the house prices very shortly, but rents in properties owned by private landlords increased at the highest level since comparable records began 7 years ago. And in relation to the house prices, I think it's actually referring to Scotland, where it actually rose at the slowest amount. Now, tenants are facing rises along with everything else that they're going through in terms of the cost of living crisis. Private rental prices paid by tenants in the UK rose by 4.2% in the year to December. And most of this has come from landlords being hit by tax and mortgage rate rises, adding to their own costs. So I think they're trying to recoup some of that themselves. But one thing we must note is that renters are now proportionally spending more on housing costs than owners do. Here's some statistics from the ONS that I think are useful. Is that within England, prices rose by the fastest in the northwest, up 13.5% over the year, and the slowest in London, a 6.3% increase. And that obviously is because London prices are obviously astronomical when we compare them to the northwest. And then just moving on slightly, Myron Jobson, who's a senior personal finance analyst, states that home prices have risen far more quickly than incomes, creating an affordability squeeze, and mortgage rates have risen to levels not seen since the financial crash. And just quickly, guys, I think I've shown this previously, but here's how mortgage rates have changed. We have the average interest rate charged on 2 and 5 year fixed deals. So obviously you can see there has been a huge change in the last few months. Moving on, now this was something a lot of people asked me over on Instagram, and it was about the best areas to invest in. And I've got plenty of videos on the channel, my friends, in relation to my thoughts around this, because the best area for yourselves may not be the best area for me. But essentially, Aldermore use a tracker here, and they base it on 5 factors which combine to make investment locations appealing to landlords. So they look at the average rent, the short-term returns through rental yield, long-term returns through house price growth, the lowest number of vacancies as a proportion of the total housing stock, and the percentage of the city's population in the rental market. Now, there are some stats here that are quite interesting. On my best buy-to-let video, I think last year, I did put Manchester in there with 2 other cities, and it does state here that it has long-term property growth with an annual average of 5.6%, which is pretty decent if you consider moving your money from the bank into an asset in Manchester. Of course, the area needs to be right. And then we have a strong performance from Essex areas, Southend, Basildon and Chelmsford. Again, this could be down to the proximity of these areas in relation to London. But we have seen significant drops for some Midland cities, Northampton, Leicester and Derby to be concise. However, rankings for Birmingham and Nottingham have improved by 8 or 9 places respectively. And again, Nottingham was one that I mentioned on a previous video. Here we have the map, guys. If anyone's not great with geography, a bit like myself, you can obviously see where they are situated. But I'm just going to run through the rest of them as well. So we've obviously got the top 10 here. As you can see, please feel free to screenshot that if you need. But there are some other cities that may well work out for you guys as well. So here are the remaining towns and cities in the top 25 best areas for buy-to-lets. Now, where are landlords investing in property? According to this landlord insurance research. Now, essentially, when you take out a property on a buy-to-let, you need to be getting landlord insurance. So essentially what they've looked at is in which areas is the most insurance being taken out in. And the UK areas with the most landlords are as follows. So we've got London in first place, Manchester, and then closely followed by Birmingham. And then in the middle, we have Liverpool, Nottingham, Glasgow and Leeds. And then finally, we have Bristol, Edinburgh and Hull. So it's really interesting to see where landlords are obviously taking out insurances and potentially buying properties. And if anyone is investing in HMOs, again, another popular strategy, especially because buy-to-lets aren't giving probably the greatest returns right now, is what are the best areas for this? And if we use the same criteria as above, we have London, Birmingham, Bristol, Manchester and Cardiff. These were the areas that shown up through the research done here. And just before I turn off, guys, I'm not sure if any of you do invest in bungalows or maisonettes, or you just stick to houses. But again, you can just see some areas which may be of use to yourselves. Next up, let's look at the UK house prices. So obviously it's now been recorded that it dropped by 0.3% in November, according to the ONS. And we also know that mortgage rates have surged if you've been following the property update videos, reflecting expectations of increased medium-term borrowing costs as the Bank of England is obviously trying to tackle inflation. Now, the cost of living crisis resulting from inflation running at above 10% is heaping further pressure on the house prices, with more people struggling to afford a deposit and monthly mortgage payments. And unfortunately, as I mentioned on all the videos, and without sounding like a broken record, my friends, a lot of refinances are up and a lot of people's costs are going to go up as well. So unless they're obviously increasing their income or they have a huge amount of savings, it's going to be tough times ahead. Now, affordability has also seen an issue for would-be homeowners since the start of the pandemic, as house prices have risen dramatically and essentially outpacing wages. So here we can see a nice little chart as well. Rising mortgage rates stopped the surge in UK house prices. Now, whether this is a small dip and then we see again it moving up like we have here, that remains to be seen. However, I am predicting, and I could be completely wrong, my friends, that we are going to start to see it tailing off and potentially coming down. And then moving on from that, London has reported the weakest annual pace of house growth price at 6.3%, less than half of the rate in the North West England, where it rose by 13.5%, which I think I said previously on the other page. Now, Gabriella Dickens, senior UK economist at Pantheon Macroeconomics, said that capital's underperformance was likely a reflection that house price to earning ratios are much more higher than the rest of the country. Now, I'm sure many of you, like myself, we don't need a rocket science degree to obviously come up with that conclusion, but it's great that somebody in that position has obviously highlighted that the wages just simply aren't increasing in relation to the prices. And then we have the number of new property listings on sales market declined too, with levels falling to minus 23%, which was the lowest since September 2021. Now, the Telegraph has reported that a surge in homes sold within a month as cash buyers pounce on price slumps. So I think last week's video, I did say that there's going to be a huge opportunity for cash buyers. And this is also a reason, my friends, why I shared this video, because the only time I'm thinking about jumping back into property and actually buying is with cash. And of course, when the opportunities present themselves. There are still deals to be done, and evidence suggests that serious buyers and sellers continue to engage with each other despite macroeconomic headwinds. So again, keep your eyes peeled because opportunities are still there, although I am waiting for a bit of a shakedown. Now, cash buyers accounted for 36% of buyers in the UK last month, which is up 33% in November, according to a survey of 120,000 home movers by On The Market. Now, Mr. Schneiderman said that there were several sales where cash buyers had their offers accepted at a slightly lower level than those needing finance. So as many of you know, cash is king. And this is why we always say, you can negotiate prices, you can move much quicker. And it is stated in this quote here, the speed at which unencumbered buyers can contract, coupled with uncertainty in the mortgage market for those buyers needing a loan, gave cash buyers more of an upper hand than at any time in the last 15 years. So it's definitely a great time to be a cash buyer if, of course, you're looking for those deals. Next up, I'm just going to leave this here, friends. This is just some main points from the UK House Price Index. And just kindly, if you are still with me, it certainly helps the channel out a lot. If you could do me a favor and just smash that like button, it massively helps. And the bigger the channel gets, hopefully the more videos I can get out to you guys. And next up, I just want to run on another prediction. So the UK house price is set to fall by 10% this year, according to Lloyds Bank CEO. Now, we know that Lloyds Bank are one of the institutional buyers of property as well. So for them, it's probably a great thing. But I'm just going to run through a couple of things on this article. And this came out of this video here, is that our base for 2023 is that we will see a recession, a mild recession, GDP of about minus 0.1% this year, unemployment staying strong, and that's more because of the constraints on the supply side. Interest rates about 4% and a recovery coming in 2023. Now, we have seen some mortgage lenders start to reduce their rates. And I think on a shorts that I did recently on this channel, my friends, is that it is getting more competitive. And obviously the more competitive it is, hopefully the better rates we can all get. And it also states the other challenges a lot of customers are focused on is house prices. And they do envisage house prices softening between 8 to 10% this year. So again, that's their prediction. Friends, let me know in the comments down below. This is a very short video. I hope you enjoyed it and I hope you're all keeping well. And as always, my friends, thanks for watching.